My goal today is for you to leave today with the impression that Canada is a great place to build fintech. Um, this is grounded. This whole presentation, I want to just ground it first in a decade worth of data. Impression was founded with one simple mandate over a decade ago, which is to back exceptional teams in financial services that are building it from the ground up. We've screened over, sorry, I went a little too fast there. We've screened over 5,000 companies, averaging roughly 800 per year. And we've said just yes to just 2 to 3 annually. And that ratio is deliberate. It's core to our strategy of heavily investing in companies where we have deep conviction. And our edge is thematic hunting. We don't wait for decks to land in our inbox. We decide upfront which subsectors are poised for nonlinear growth. And then we go looking for the outlier teams that are already attacking them. By the time we lead a round, we have heavy conviction, and that's why our LPs, big banks, insurance companies, and global family offices keep doubling down, and why independent benchmarks place our funds comfortably in the top quartile for net IRR. In other words, we may be Canadian, but our returns are hardly polite. So, what does that discipline look like in the wild? 25 core investments, 12 years, 4 full exits, and the very first check, Wealthsimple, now manages $70 billion for over 3 million Canadians. We're deploying out of Fund 4, a $70 million vehicle with the exact same strategies as our prior funds. Same stage, check size, playbook. We lead the round, no financial engineering on the term sheet. We keep it clean, we take a board seat, and most importantly, stay in the trenches with the founders until the coast is clear. Our model is hands-on. We lead price rounds from seed through Series A, and we reserve to continue backing our winners. Strategic influence isn't a PowerPoint filler for us. Ask any of our CEOs, of which there are 3 up here, who have called us at midnight. They've needed us to fire their Series B lead. We've been there for all of them. We have scars, and we're happy to share them with our founders. We will tell you what we would do, but we'll never tell you what to do. Our portfolio spans a full spectrum of fintech, I think, which is especially relevant for today's presentation. We have invested in everything from personal finance, tax, compliance, credit infrastructure, you name it. We've seen it and we've invested in it. And covering this range isn't accidental. It's a product of a decade spent mapping where financial services break down and backing the founders bold enough to rebuild each piece. If you spot a theme here, it's that boring is beautiful. Sexy UX might win headlines, but rock-solid infrastructure makes unicorns. All right, on to the presentation. Here are the 4 biggest misconceptions that I have heard consistently over the last decade, and they're just as valid here in Canada as anywhere else. First, fintech is just banking and payments. Mature markets with little room to grow. This one couldn't be more off the mark. Sure, banking and payments are a big piece of the puzzle, don't get me wrong. But it's so much more than that. And we'll cover that in a few minutes. I've got another slide just to show you the market map of fintech. Second, isn't all fintech in crypto and Web3? Crypto, they're exciting, don't get me wrong, but they're just one chapter in a much bigger book. Traditional finances are still powering the economy, and there's immense potential to innovate there, even with decade-old technology. Blockchain's cool, but it's not even remotely the whole story. Third, it's impossible to build in Canada. Too much red tape, not enough capital. I get why people might think that, but the data tells a different story. Canada's regulatory environment is actually a strength, which I'll dive into shortly. It's not a barrier, it's a springboard. And fourth, and this one's almost laughable, but everything's being done, there's no room left. Technology evolves, consumers need shift, and new opportunities emerge. Look at AI. 5 years ago, we weren't talking about generative AI at all in financial services. The fintech space is massive, and we're just getting started. Let's unpack that last point a bit more because the sheer scale of fintech deserves a spotlight. As I mentioned, we see fintech across 3 major subverticals: consumer, B2B, and infrastructure. In the consumer world beyond banking, there's a hunger for tools at personal financial planning, think robo-advisors, or platforms that make investing in alternative assets accessible to everyone, not just the wealthy, just to name a few. InsurTech permeates all three subsectors, sometimes all in one startup. For example, in parametric insurance, sold potentially directly to consumer, you get a claim that triggers a payout automatically at a specific location at a specific time or event, like if the winds hit 120 kilometers an hour. Real estate and fintech is streamlining transactions, making buying a home less of a bureaucratic nightmare and more transparent. On the B2B front, businesses need better payment solutions, cash flow management tools, cybersecurity solutions to protect financial transactions. Infrastructure fintech is the unsung hero here. Consultancy data puts infrastructure at roughly 55% of global fintech enterprise value, bigger than consumer and B2B combined. Think fraud detection tools, compliance platforms, data management tools that keep the whole system running. We could spend it all day on this slide alone, but for now, I just ask that you be curious about how big the fintech space truly is. Now, let's move on to why Canada is such a great place to build in this space. Canada is a prime location for fintech innovation thanks to its principles-based, centralized regulatory framework. Unlike the US's fragmented, rules-based system, which requires navigating 50 state-specific regulation, Canada's approach is pragmatic. For example, one of our portfolio companies, Brim Financial, has leveraged this clarity to launch a credit card business here in Canada with no bank partner in order to prove their infrastructure layer works. In the US, they never would have gotten permission to launch. Compared to the other G7 countries, Canada's framework is akin to the UK's, but more streamlined than Germany's or Japan's, where bureaucratic hurdles can slow progress. This regulatory advantage makes Canada an ideal testing ground for new financial products. A Canadian startup can get regulatory clarity in months and roll out coast to coast. South of the border, that same firm needs a legal budget big enough to buy a small island in Muskoka. Regulation is just the opening salvo. Median software salaries run 40 to 50% lower in Canada before you factor in shred. Yet our AI research pedigree ranks top 3 globally. Add world-class finance talent pouring out of the big 5 banks, and you get an ecosystem where $1 of seed capital buys you at least $2 of progress, if not more. Scale potential? The combined G7 financial services pool is roughly $11 trillion in annual revenue. Build once under Canada's pragmatic charter, and you can sell in New York, London, and Frankfurt without rewriting your core. That's a sandbox big enough for 100 unicorns at least. Despite these strengths, there are some challenges in Canada. We have few banking licenses and really only one banking as a service offering, limiting new banking opportunities, aka don't build a neobank in Canada. Open banking, a game changer in the UK. Here in Canada, we're lagging 8 years behind and are completely stalled, hindering data sharing innovation. Incumbent financial institutions are often risk averse, dragging on partnership discussions until, unintentionally, fintechs run out of capital. While there is a perception that fintech capital is limited here, the reality is Canada's ecosystem is in fact not uniquely constrained, aka capital is scarce everywhere. The key is to focus on subsectors where regulatory barriers are lower and the opportunities are massive, like SMB finance, insurtech, financial wellness, capital markets data, just to name a few, and there are thousands. For example, OWL, one of our portfolio companies, fraud detection solution thrives in this environment, addressing global needs with Canadian innovation. Here's the part that keeps me up at night. In 2014, we would see about 200 Canadian fintech startups a year. By 2019, that dropped to about 150. Last year, barely 100. This chart looks like my iPhone battery life after a day. Not good. This decline signals a need to unleash entrepreneurial energy and dispel fears about fintech innovation in Canada. We must encourage founders to leverage Canada's strengths and build here. Contrary to barroom gossip, Canada's fintech investment ecosystem is relatively robust. At pre-seed, you have Impression, N49P, Panache, Ripple, Version 1, Staircase, Northside, and many more. I won't run through every logo. That slide does it for me. But founders can and do put entire rounds together without crossing the border. And speaking of the border, there are well over 100 US and European firms that invest here. Frankly, too many to list. So capital is here, The real question is, where we aim it. Now, if you're thinking of getting started, where would you aim? Let me give you some thoughts. Our research flags 4 Canadian white spaces begging for talent. Number 1, insurtech. Across life, health, personal, and commercial lines, sadly, it seems like we still build and buy insurance like it's 1987. And I'll dive into this in a little bit. Same with our second one, private credit. $2.1 trillion under management globally and growing fast, filling gaps left by traditional banks, yet fewer than 10 purpose-built vendor softwares. SMB bank and infrastructure, the bastard child of personal banking and commercial banking. The banks are not investing in this area. They think the market's too small, despite there being 500,000 small businesses here in Canada and easily 12 million in the US. Embedded finance, integrating financial services into non-financial partners like buy now, pay later solutions. Every vertical SaaS platform wants to become a bank without applying for a charter. Let's enable them. Deal flow abroad is exploding in these areas. Yet at home, it's a drip. That gap is your invitation to innovate. All right, I mentioned that we were thematic investors, and I'm going to give you 3 themes here that we think we should be building here in Canada. First, AI-powered financial infrastructure. This one's sort of a no-brainer. The global AI finance market is a $38 billion market today and on track for $190 billion by 2013. Importantly, we are seeing enterprise pull, not push. Wall Street banks now budget an entire product lines around Gen AI. JP Morgan alone is spending $18 billion on this tech this year alone and has rolled out custom LLMs tools for over 200,000 employees. This is a massive tool chain upgrade cycle like we haven't seen in banking since 1980 with the desktop PC. Every node of the financial stock is ripe for replacement, setting up a decade-long vendor land grab. Private credit. As I told you, I mentioned this. Private credit AUM quadrupled in the last decade. Analysts now pencil in $3 trillion by 2028 as the LBO pipelines reopen and sponsors hunt for non-bank capital. There is a massive digitization gap. Origination, covenant monitoring, secondary trading are all still Excel plus email. Workflow, prime ground for SaaS and API Rails. Whoever supplies the data layer can win a toll booth on every transaction. Third, the insurance tech renaissance. Analysts peg the global insurtech. Oh, no, I'm too far ahead. Sorry, guys. There you go. There. Analysts peg the global insurtech market at $152 billion by 2030, compounding roughly 52% every year between now and then. The reason is simple. Every percentage point shaved off the loss ratio is worth billions. Push that to 90, bolt on parametric triggers, wrap it all in API, and suddenly you can sell micro policies by the hour, embed coverage inside a checkout flow, or underwrite a hurricane claim before the storm makes landfall. It's insurance rewriting as real-time software. Together, these 3 ways, AI infrastructure, private credit, and insurtech are amazing opportunities for Canadian fintech founders. Let's dig a little deeper into each one. So first, AI and fintech. Why the frenzy? Because AI collapsed cost curve. Token costs are dropping fast, and almost every role is made faster and smarter paired with AI. Data shows that developers are coding 55% faster when paired with AI, and we're seeing that trend across all the other roles within organizations. And remember that world-class AI talent I mentioned? It's literally down the street at the Vector Institute. Need some ideas? Here are a few. Bookkeeping and tax. Imagine a ledger that never sleeps. Every invoice, bank feed, expense receipt streams into a single system. It's categorized by an LLM that understands gap nuances and posts the right journal entry without a human review. Trade finance bots. Global trade still runs on paper. An AI agent can read, scan documents, extract field lenders care about, the fields that lenders care about, match against them shipping line data, and authorize a drawdown within minutes. Well, Tech Copilot. Advisor spends up to half their day on KYC refreshes, suitability questionnaires, and meeting notes. A conversational copilot, could pull a client's last risk profile, pre-fill regulatory forms, and suggest portfolio tweaks based on real-time market moves and draft follow-up emails. I could go on. There's so many other ideas here. And one of the company I want to highlight, and we're going to have Josh Green talking here in a little bit of a minute, is Border Pass, who is founded right here in Toronto. Every year, 500,000 immigrants arrive with thin credit files and get shut out of mainstream finance. Their immigration dossiers, however, are data gold mines. And Border Pass's AI engine can extract that data in a format that banks and others can digest. It is literally the on-ramp between legal tech and financial inclusion. And you'll hear from Josh Green here in a few minutes. A little bit, some more ideas in private credit. Private credit is thriving with AUM reaching 2.1 trillion, a fourfold increase in a decade. AI and automation streamline underwriting while sophisticated structures like NAV-based facilities enhance flexibility. Portfolio management tools, embedded finance like buy now, pay later are key growth areas. The underwriting workflow, though, as I mentioned, is still Excel plus email. Perfect AI fodder. Imagine real-time covenant tracking, anomaly detection, cash flow waterfalls, all in a portal instead of a 400-row spreadsheet. 4 areas to beg for solutions. Portfolio management dashboards, automated workflows, embedded lending, BNPL 2.0. So many great ideas within the private credit space and largely untouched even to this day. Cascade, one of our portfolio companies. One Torontonian or 2 Torontonians? One Torontonian who once ran so 2 of them, both Canadians, ran a private credit fund. They lived the pain of manual reconciling reams of servicer data, so they built a tool they wished existed. And Mike here will tell you a bit more in a bit. Last but not least, InsurTech. InsurTech is growing at 52% annual growth rate, with AI automating, like as I mentioned, 60% of claims processing at the best-in-class insurers. But tier 3, 4, and 5 insurance companies don't have these tools. Only the biggest have access. We expect claim underwriting to get to 90% plus in the next few years. Further, can you guys still hear me? Furthermore, and I can just shout. No, is it good? Furthermore, in underwriting, for example, the name of the game a few years ago was all about predictive AI, but that's now so 2024. The new game in town is deterministic AI. Deterministic AI is going to improve underwriting by another order of magnitude and do the same to claims as well. The sector is ripe for disruption, offering faster, more transparent solutions. Again, 4 ideas to get the ideas flowing. Automated claims processing. The world is awash in data today, text, audio, visual. Think about how to use all that data, automate decision-making on claims. Expediting workflows. Insurance management systems, especially for small brokers, agents, and carriers, seem like they're right from the Stone Ages. Direct to consumer, simplifying insurance purchases. Again, think about all the data the world is awash in. Yep. How about now? Test, test. Okay, we got a thumbs up. All right, excellent. The sub verticals, and then direct to consumer. We're simplifying insurance purchases. Again, think about all the data that we're awash in. How can you use that to enable better direct sales? And we're going to hear a little bit from Dihan at Goose, which is another one of our portfolio companies. Oh, now I went a little ahead there. So we'll hear from Goose here in a bit. Goose is a great example of what we're seeing in the direct-to-consumer InsurTech space and just InsurTech in general. So can't wait to hear from him. All right. Last takeaway. Canada, if there's one message, again, I hope you guys take back to your teams, that the opportunity is huge. The conditions around us, regulatory shifts. Is it better if I stand back here? Yes, I think that's better. All to say, we think FinTech is super exciting, and we love being a part of it, and we can't wait to see what you guys are all building. Canada's a fantastic place to build. So let's go, guys. Q&A. Yep, we got some Q&A. Happy to answer some questions. Any brave volunteers?
Can you hear me? What do you think about the path to open banking in Canada?
What do I think about the path to open banking? Well, it's stalled right now. And I think it's just the combination of our federal government unwillingness to move forward on it, largely because the general perception from the public is that they don't care. And it's very hard politically to move on something that the general public doesn't get you any votes. You don't lose any votes. You don't win any votes on open banking. And there's just no real determination in Ottawa, certainly from the previous government, to move forward on it. This new government, it frankly, it's too early to tell. But the next session of Parliament hopefully will.
I saw your deck, the part about pricing and C. That's the standard. Very early stage. How do fintech products work? Or you could bring a typical fintech product to market, even for early users for MVP, you probably need at least 300,000 Canadian dollars. Where is that funding? Because I've not seen it out.
So your question
MVP product stage, pre-product, pre-revenue. I know the people that fund post-revenue.
don't need big teams now to get off the ground. You don't. Here we go. So two things, two answers to that. First answer is that we're seeing two-man founder teams get a lot done, and there's certainly more willingness, especially from smaller incumbents. So not the big five banks here in Canada, but smaller incumbents to pilot, run pilots even with two-man teams, which was not the case, 20 years ago. And second, there's a lot of angel funding still around. Look, capital is always scarce. It always has been. It's always hard to raise money. I'm never going to take that away from founders. But the capital is there, and you don't need nearly as much as you think you do to get going.
Hello. Thanks. So you probably saw Wealthsimple's The End of Banking product thing a few weeks ago. You had a slide there to say that, Canada's maybe 8 years behind the UK and things like that. So I am from the UK, probably tough on my accent. I've never paid for a bank account my whole life. And I'm older than I look. So what's your take on, that it's maybe a little bit too little too late in terms of fee-free banking? And relating to the person's question there about open banking, that accelerates consumers' understanding of where they can get most value. And, the big five, they offer a pittance in terms of rate of return on your deposits, and they charge you. I think that's a massive area to innovate, and how much of that is really realistic to innovate unless you are, a Wealthsimple or somehow able to lobby the government, because I would argue that the government is interested in making sure that the banks survive, right? It's a big thing to fix, in my opinion, and I think there's 20, 30 years worth of work to do as Wealthsimple is figured out and monetized.
Yeah, and I would say banking is probably one of the areas where Canada is the furthest behind, but not for the reasons that either that you mentioned. And I think I mentioned in my presentation very briefly. So many of you probably missed it, but we really only have one banking as a service platform. So in almost every other jurisdiction, where you have many more banking licenses, one of those banking license holders has taken a flyer and said, "Hey, look, I'm landlocked in small town Massachusetts. I've got a license here, and you know what? I'm going to try to acquire customers outside of my little small town Massachusetts. And the way I'm going to do that is I'm going to create a banking as a service rail, enable a neobank to go acquire customers for me all over the U.S. And let's see how this goes. And then whether it's the U.S. or Romania or Hungary, what we're seeing in the EU." Lot more digital rails for actually providing, banking as a core platform, banking as a service, and that has accelerated all of these other truly innovative banking platforms in Canada. Like we have People's Trust, and I don't want to speak ill of them. They're powering everything that's out there in Canada. I wish we had 6 or 7, 8 more banking as a service platforms here in Canada. I think that would drive a lot more innovation. And then that would leapfrog exactly the points you're just making around, how much can the banks charge and lobbying the government. You don't have to do that if you have a healthy banking as a service rail environment.
Thank you. Thanks.
One last one.
Hi, I'm Siju. The last statement that you have, underrated fintech launchpad. When I think of open banking, 8 years behind, infrastructure is so important. Cloud, we are really behind. Integration takes easily a year or more. So how do you see this as a launchpad? Regulations are so tough. Just not clear, but how do you consider that as a launchpad like Canada?
If you think of the regulations as tough being here, they are way tougher everywhere else. And again, we have the big banks as LPs. We're friends with them. I would not, as a startup, be selling to the big banks. There are credit unions. There are smaller banks that are much more innovative. There are smaller insurance companies that are much more innovative. There are a lot of partners out there to work with and build infrastructure and launch here in Canada and go elsewhere. And the regulatory environment is much friendlier here than anywhere else. If you don't, trust me on this one. And so I really do think Canada is a fantastic launchpad. We have to dispel these myths that people have today that this is a bad place to start a fintech. It's actually a great place to start a fintech.
I mean, the data should come through open banking, and open banking is limiting everyone.
But open banking is want to go back to that market map. Open banking is like a teeny slice of that overall piece. It's like literally 2% of fintech.
But how
there's the other 98% of fintech that you can go and tackle.
But how can a fintech access data if you don't have such channels?
But open banking, as envisioned in the UK and then here in Canada, is just consumer level banking information. I mean, there's all sorts of other types of information that are out there, and so open banking, honestly, is doesn't solve anything. I mean, it solves a little bit of things. Don't get me wrong, I want to see it. Not that exciting in the grand scheme of things.